Hey, how are you guys? So I'm Justin Pulitzer. This is my Periscope for 4215, and we are going to do a live Q&A. This is take 4. There had been some problems with the technology before, and just to recap, I had discussed. Someone had asked in the pre-questions, what are some books that I recommend? The first and foremost one is Reminiscences of a Stock Operator by Edwin Lefebvre. It's about Jesse Livermore. There's also another book that was written directly by Livermore, and it's called How to Trade in Stocks. That's a great one. And the other one I like is by Selden, The Psychology of the Stock Markets. So those are the books that I recommend. So as I had discussed before, I'm happy to field some stock-specific questions on this, but I prefer to use those more for the weekend update because I can really use the screen to show you guys the technicals. On here, it's sort of just spouting off. I'd be happy to go over a few, but I feel that that's better for the weekend review. If there are any other types of questions, like if you want clarification, this would be a good forum to do that. One of the questions I had gotten earlier was Google. I had seen Google breaking trend, also the breaking out area right on the 100 MA. It's possible for some type of a throwback bounce, but the stock looks a little iffy to me below 553, particularly below 545. There was another question I had asked. I don't really trade Forex. Someone had asked me about that. I mostly am stock specific, particularly with the momentums or with market indices. So someone had just asked, how do I see the state of the market? All right, so let's do one at a time here. So the state of the market I see is a little bit iffy here. Just looking at my charts, and we'll talk. I mostly use the ETFs. I think most of you guys trade in the ETFs anyway. So as far as I see with SPY, I had been talking about the SPY being in sort of a distribution pattern and different levels being is key. I sort of see us in this consolidation pattern. It's very similar actually to the one we've been in. Really, there was one that was from 1226-ish all the way to February 2nd. And this pattern that we're in now sort of is looking a little bit like that. So I think the market is going to be very choppy and very volatile. The key distribution levels that I see as important for the upper distribution is 207.84 to 208.97. Anything below that to me is in the middle distribution, which the key levels there are 206.42 down to 205.30. Is it a 3 or an 8? Let's see. 205.38, that's what I thought. Anything below there, we're into the lower distribution, which is 201.90. Anything below that is then 197.87, but we're not discussing that yet. I do see that the 201.90 would roughly coincide with the 200 MA when we got there, and it's also a gap fill. I think that area is going to support. I had discussed yesterday on the Tasty Trade and Shadow Trader Uncovered show that currently long a put ratio of 205 and short 2 times the amount of 202s. I think that will work if we have a down move. I actually like today was a little bit of a bounce. It gave me some theta decay, plus we have tomorrow off. Usually in general, I like to be a net seller of puts, particularly when IV is high. The IV is a little bit low right now on a lot of stocks. So when that happens, I usually am more of a buyer of options. And what I do is I look at the IV percentile. Somebody had asked me, do I prefer buying equity or do I prefer shorting puts? In general, I prefer shorting puts because it gives me sort of a margin of error. But I often do trade equity, particularly when the volatility is very low, and I'll often buy options as a hedge. Why I like put ratios? Because I often can get... Like I had said, my lavalier mic had broken, and I'm using my iPhone headphones, and I just moved, and it pulled the camera over. I do have another mic on order, just so you know, so the sound quality will be even better, and hopefully the Periscope technical issues will be resolved and will be in much better shape. Someone had asked me why I like put ratios. because I can often get them on for a net credit. So therefore, if I'm wrong, it doesn't cost me anything. It's not like buying a put, like buying naked puts or buying a put spread. If I can get the put ratio on for a net credit, if it goes the opposite way for me, hey, I had a cheap shot at downside. The only downside, really, the major downside with put ratios is you want to keep them near dated, because what you're really banking on is for the stock to come down, but gradually. If it comes down too hard and too fast, that's going to be treated as almost like you're long, because you're sort of overwritten. You've oversold the puts. So if you come down too hard and too fast, that delta could go positive on you very quickly, and the position could be under pressure. Often, another advantage of the put ratio is that the break even is below the lower strike, so you can often factor that in. So that is why I prefer put ratios. I've been using a lot of them lately. It's sort of also contingent on market conditions. I like when the market is sort of in this bit of a grinding fashion. If the market was in absolute free fall, you would not hear me doing put ratios. I would do call ratios, or I would just pay outright short. What about the big wide butterfly against long shares? Interesting, but moves could be larger and almost X2. Yeah, that's why I use short dated. If you take a look in the options chain, you know what's being priced in. I mean, there's always the risk of an outside move, but if you follow stocks, you usually know how they react. So that is why I think you can do put ratios on a short period of time. You want to be very careful around earnings. You don't want to mess around with them then. It's sort of an in-between period of time, which we are right now. Europe, I'm involved with a little bit, but I don't really trade the European markets as much. I prefer to key off the U.S. The European markets do get a little bit interesting to me on occasion, usually at extremes, but I don't really follow or trade them as oftenly. I do think that if you follow EWG, for example, we're getting a little bit high on in terms of the channel. Oh, what is the time frame for put spreads? I like to do the weeklies, either the current week or the following week, and I'll often look to put them on usually Wednesday, because that's when you sort of get the accelerated theta decay for the following week. So if you can get them on, sometimes late Tuesday, usually Wednesday. I like between Wednesday and Friday is usually my ideal time for that. The thinking is sort of aim small, miss small, that the chances of a big outsized move, or your ability to manage something, is greatly increased if it's a short time frame. Like, for example, if a trade does go against you, if there's some type of a news, you could always roll it out and not be too far out on the time spectrum. If you're like 30 or 50 days out, it starts getting a little iffy. The most I'll ever go with short options is 30 to maybe 50 days. But often I will be long options, like if I'm trying to play like a risk reversal call spread, which just means selling puts and buying out of the money calls. Sometimes I'll mix it up. I'll do it almost as a diagonal or a calendar. I'll buy a longer dated call spread, and then I'll start selling weeklies or more near dated puts against it, and then I could keep doing that to bring down my expense. Often I'll just keep it apples to apples in the same month and do that. But in general, I like selling near-dated premium and selling longer-dated premium. I'm sorry. I like selling longer-dated... Got myself caught up in a tongue twister. I'm sorry. Just disregard that. I like selling near-dated premium and buying long-dated premium. Sometimes if I'm going to play outright directional, like if I wanted to buy puts on something, I'd buy longer-dated puts and then sell near-dated puts against them. The whole idea is just to keep wearing that premium down so it's not costing me as much. And in a low IV environment, sometimes I'm just an outright directional player with options. Or like, for example, with the BABA play, I bought a put spread just to hedge shares. That, by the way, is sort of a very iffy trade, and I don't have a lot of commitment in it. Any advice in trading? What patterns technically you look at? Your strategy for scanning winners in a choppy environment. All right, so picking winners in a choppy environment. This better not go over on me again. I look at the trend and I look at setups. What I'll do is I'll narrow my time horizon, and I will sort of like, for example, when the markets get really iffy, if you buy off a 61.8 Fibonacci retracement, maybe you're just playing it for a few point bounce. You're not going for the longer swing, like, back up to resistance. Maybe you're just going to go for the $5 or $7 bounce, for example, in like a Baidu or something. You play for shorter time frames and play what I always say for singles and doubles. You're not really going for the home runs. With regard to Baba, yeah, unfortunately I am still long, although I do have a call spread on. I have let me just take a look at what I got on. I have the 84, 80 half, 15 days to expiration. I'm down, believe it or not, I'm really not even down that much on the position. It's those lower puts have been losing some premium. I am looking to sort of sell against them, call spreads. The look I've been sort of looking for Baba to get back to 90 and possibly even 100, although it seems to me it's unlikely that it's going to happen without a squeeze or maybe even earnings. I would say that the move now would be maybe up to 87, which is the declining 50-day moving average. I think that would be a good spot actually to flip and try right or right out short, believe it or not. How much is low IV and high IV? All right, so that is subjective. What I often do, yeah, Baba, very disappointing. I think let me just finish on Baba. I think the problem with Baba is that you had the share overhang, and now you have tax loss selling. So we may even have to wait a couple of weeks until after tax day. I think a lot of funds are waiting for selling to pay for their taxes, and then they'll get back in after they get fresh money in when people contribute to their IRAs. So, no, it's not only going to be options. If you have any stock-specific questions, I'd be happy to answer them also. So, what was the last question? There were just a few that I was reading. There was one the IV question. Thank you. The question with IV. All right. So the question. Let's just do one at a time. If you guys could hold off on the intra question, hold off on some of the questions until it's like close to when I'm winding down on the question, because I'll forget them. There's a lot that are coming up. So let's do the IV question first, because I think that's a very important one. If you look in your TOS option chain, you can see all the way on the right there's a fixed amount of IV, then the plus or minus of what the expected market maker move is. If you scroll down, there's also a little bit more of a description of options. It says today's option statistics, and you'll see current IV percentile and then the historical IV percentile. Let me look quickly. Current H. So, like, for example, let me show you let's do Apple, actually. Everyone likes Apple, right? So Apple right now, the current IV percentile is 47%. So it's below 50, so you know the IV isn't very high right now. My experience with Apple, as a case in point example with IV, 25, 26 is about the average IV. Anything below there is cheap. Anything above there starts getting expensive. So if you can get into the mid-30s or mid-40s, you want to be a premium seller, particularly if you want to do strangles or iron condors or out-of-the-money puts or out-of-the-money calls, whatever your directional bias. You will have the benefit of IV crush, meaning that the sort of the event risk comes out. Like, so for example, if you sold puts in Apple and the IV was 44%, and then after the print it drops down to like 24 or 25%, that means your Vega, which is the sort of forgotten Greek, gets absolutely crushed. Often that is more important than direction, believe it or not. So I usually like to wait till IV is high to sell puts. One of the reasons why people get slammed in a down market is because the IV jacks up as people are buying protection. They will often wait till the last minute. It's sort of buying the hurricane insurance when the storm is at your doorstep. They don't buy it when the VIX is 10 or 14. They wait until it's 20 or 25, and then that's what jacks up the premiums. So that's what options are. A very large percentage is priced in, and you want to, like I said, when it's low, you want to be a buyer of premium, and when it's high, you want to be more of a seller. So that covers the. I think does that cover your question? If not, I could discuss a little bit more. You can do a scan for high IV options in TOS. The only issue is that it usually winds up pulling up the ones that have earnings. Often there are some other ones in there, and you can do some. It's usually story stocks that have the high IV. Think like Herbalife or this Lumber Liquidators. Lately, that IV is spiked because there's obviously major event risk, or earnings is when the IV gets jacked. That's why I often prefer ratios, because if the IV moves against you, it doesn't hurt as much. Yes, in Thinkorswim. That's what I'm talking about. Were there some other questions? I had seen a few flash forward, but Google has been having issues about. Yes, you'll be able to replay it. I'm going to post this on YouTube. The issue with Google is that they have some. The EU, I think, wants to try and break Google up, and I think that they're sort of suffering from what Microsoft suffered from when they had the Justice Department, with anti-monopolistic probes combing into them. So I think Google is sort of hamstrung with that. I also think that they're not getting enough credit for YouTube, which should be, I think, valued higher based on some of the valuations that are coming into companies like Snapchat, which I think is frankly a piece of crap. But I much prefer Instagram, which is owned by Facebook, and that's part of my thesis, by the way, for Facebook getting to 100. They paid $1 billion for Instagram, which at the time was considered expensive, and I've seen some valuations clocking it all the way up to $37 billion. So that, in my opinion, is not factored into Facebook. I also think that their mobile payments app is going to be huge, particularly if they can put it through to WhatsApp, which is huge overseas. I think that that's going to be a big peer-to-peer payment type of a product. And I also think that they're going to integrate the ability to buy products right into their site. Like you'll have a Buy It Now button or some sort of payment instrument, which will be really major for advertisers. So I think that's also one of the things, going back to Google, what's been hurting Google is that there is money pouring from advertising budgets, not only from Google, but now into Facebook and maybe Twitter or some other types of online venues. But I do think that online payment is going to be huge for Facebook. I'm not seeing, I hope this didn't junk out on me again, I'm not seeing messages from you guys. They just sort of conked out all of a sudden. Oh, here we go. Yep, Facebook acquisitions are looking good. All right, so yeah, the drone service I think is okay. I don't really know if that's going to be a needle mover, but it's good that they're bringing internet around the world. I don't really have much of an opinion on Bitcoin. I'm not really of a trader in it. I remember when it got over 1,000, I told everyone who wanted to listen that I thought it was a short, and the thing absolutely collapsed. It went really parabolic, and it went down. I think that the story with Bitcoin, in my opinion, is that it was being used by the mafia, frankly, in China and in Russia to get around the country's capital controls, also wealthy millionaires and billionaires who were trying to get money out of their country. And I think that those capital constraints were placed on them, and that's what I think has really been responsible for the problem in Bitcoin. That I think the idea of Bitcoin is really good, but the more for legitimate purposes that you have Apple Pay and like Facebook Pay, it becomes less and less relevant to me. I do think that there will be a place for Bitcoin. I don't know that it's going to be really the key momentum that it had been. The more it gets adopted, the less that volatility should come into play. Are there any more that you got? Some people. Yeah, Facebook is, I think, one of the best managed companies, and I think it's going to go a lot higher. I do think over 100. Bitcoin. I have no idea about what to trade Bitcoin as far as the home trader. I think just directly in it. As far as Twitter goes, I just saw a couple of questions on that. All right, so this is the story with Twitter. It came back into a area that has been recognized as resistance, and that is namely $50. That was the IPO high. It was 50.09. There was a gap to fill around the 48s. And I think that the issue for me is that it needs a second good quarter. That's really the problem. That's when Facebook really took off. It had the one good quarter, the stock went up, and then after the second one was the kind of aha moment when it went over 38 and never looked back, and it just exploded higher. I think that's really what Twitter needs to break out of this malaise and range. I think there's a lot of non-believers, and the stock, I think, is just going to be range-bound. The way I've said to play it, if you want to be a Twitter believer, I do think over time it will get back up at some point and retest the highs if they can do that second good quarter in a row. I think between now and then, the market is going to depend a little bit. I see the maximum upside without earnings is 56. That's pretty high. I think you'd need a pretty good market rally to get there. But I think this like 52 to 53, 64 area is a little bit of resistance here, and it's going to be some problems. Yeah, I see LS. Yeah, I you know, the issue. I'll give you a little bit of a preview of what I'm going to say in my weekend update with Apple. The issue with Apple is if you look at the chart, it's sort of had these boxed off periods for a while. I discussed this a little bit on the Tasty Trade show with Brad on Shadow Trader, and I just see that the stock is in a bit of a choppy consolidation range, and it's going to be up and down, and it's going to be waiting probably until this watch release and the quarter. I don't really see the watch release as being so significant, although I do see it as something that the bears could sink their teeth into and say, oh, Apple did the watch and it's a bust, and you know, it could be a catalyst to short the stock. I think the iWatch is going to do okay. I'm still debating if I'm going to get it. I may wait till the second generation, although I'd probably get the lower end one. I have, a couple of more fancy watches that I'm not ready to turn in yet for the Apple Watch. Plus, I could always just look at my iPhone. I do think, though, that the iPhone sales are going to be pretty good. I think that it has another year into the iPhone, the 6S. And I've heard some speculation. I've heard this before about some other iPhone models, but I'm starting to hear it from some of my techie friends that the back Apple might be clear and light up on the 6S. And if that happens, it's going to be huge. I know it sounds stupid, but it would be a cool status thing, sort of like the computer, and I think that would be a big catalyst for upgrades, particularly from the younger generation who might be tempted by cheaper Android prices. The thing I see about Android, just so you know from my research, is that most people seem to use Android as a replacement for their flip phone. Like older people who don't really use the functionality tend to actually, believe it or not, go toward iPhone because it's simple. But a lot of people who were using flip phones and they don't really use the smartphone functionality, use Android, and that's why the upgrade cycle and the ability for them to monetize their app store is so much lower. But I think the iPhone 6 is huge, and I think the upgrade cycle is for real, and I think that the stock has some issues, though. I have discussed this, that we reached the big 1.618 Fibonacci extension on Apple, which was 128.97, and that was from the 2011 high to the low. Let me take a look on the chart. Let's go to a 3-year daily. I'm on my laptop here, so I might not be as easy to do. Yeah, so the high roughly came in like September of 2012, and then the bottom when it really started ramping was 620. Let's see. Yeah, 628-ish. So if you measure from that to the low, and then you multiply that distance by 1.618 and add it to the low, you exactly get 128.97, and that's the fib extension. We reached that. So that's a really, really key level, particularly for a stock like Apple that trades so much on technicals. I think that there is, believe it or not, the risk for the pullback. I don't like that the last kind of swing low, the key one before this recent, right now it's just hovering on the 50-day. It's hovering between the 50 and the 20. I think Apple is always the strongest when it's over the 20-day moving average. When it's below, it's a little bit suspect. The thing that bothers me is that, and I've been talking about this with Tesla and some of the other momentum stocks, is that they haven't been correcting properly. They've sort of been bouncing ahead of the stronger support, which were usually their breakouts. And that's why these rallies aren't holding, because they're not launching from as solid of a base. They're kind of launching ahead of time, and they're not launching from the key support. So I would have liked to have seen Apple hit 119.75, which was really the breakout. It didn't. It rallied ahead of it, and now we've been making lower highs. The key in my mind for Apple is the first level is 127, but really the really key one was the morning that they were added to the Dow Jones Industrial Average. The spike high that day was 129.85. So I really think Apple for another leg higher, which would take it to the 140s and maybe the 150s. The way I have the charts drawn now, it would be if it did it on Monday, it would be like 142, 143. If that were to happen, then you have the resistance up there. But I would say that the quote unquote the next $10 in Apple is a little bit more iffy. I would say that there is a lot of risk, believe it or not, down to the channel low, which is around 115. There's also some other levels around 112, and also obviously the gap fill, which is, believe it or not, the 61.8 of the recent range, and the 200 MA currently around 109. I think that would be a screaming buy. I don't know if we get there so easily. I think it's just going to sort of be choppy. I like to buy stocks, momentum stocks, when they have the momentum, so I would wait for a break of the downtrend line or a test of one of those lower levels. So that is my thinking on Apple. I'm going to show the box in the weekend update, and we could discuss that in a little bit. I'll discuss oil in one sec. Let me just get to Tesla, because they are actually, believe it or not, intertwined. So Tesla has been weak a lot because we all know oil and gasoline prices have been it's a crash. It's a crash in oil. I mean, oil went from, let's see, before it really peaked out, 2 years daily. That should be enough, right? Yeah, the real breakdown, I mean, it got up to like 109, 110, and then it absolutely since then has just been in a free fall. So it's been consolidating. I know a lot of manufacturers have production costs in the mid to low 40s. So I think that it could have another leg down like to 32, 33, but it would be unsustainable, and it would just be pure momentum and liquidation driven. I think this area is roughly the fair price for oil. It wouldn't shock me to see it move back up if there's some type of a Middle East crisis, or if there's some type of a change in sentiment, so to speak. It's coming into the summer driving season. Maybe people are more motivated to drive. I always say the cure for high prices are high prices, because people, supply and demand at some point kicks in. People, if something gets too expensive, they don't use it as much. When something gets cheap, they use it more. So that, to me, this is really the big problem I've found. And not to be on my pedestal, my soapbox preaching, but there's a lot of interference. I mean, the Fed has been interfering. There's a ton of government interference, and they all seem to forget the undisputable law of supply and demand. And artificially changing things is not sustainable in the longer period of time. And I think that the oil will find an equilibrium when it does. I do think that they've been cutting back production, and I think that will eventually affect the price of oil. With regard to Tesla, what I see, oddly, in real time, I had thought Tesla was going to get to about 300. I remember the day it actually peaked. I think I was a day early. I had said to people to get around 290, 289, 290, and wow, 291.42 wound up being the top. I remember a few people were criticizing me at the time, saying, "Oh, you left a couple of points on the table." I don't know. I mean, the stock's down over 100 points now, so I don't know who's the sucker now. But thank you. This thing, I can't wait for the new microphone. Anytime I move, it pulls over. Anyhow, my thinking on Tesla is that it will set up again. I know the shorts have been lacing into this thing. It's coming down to some important levels here. I'll show in the weekend video, I've shown this a couple of times, that there is a key level between 185 and 177.22. And I had discussed on the stream that Tesla looked like it was breaking down a little bit, but horizontal breakdowns are often the hardest, particularly when something has been down a lot, because you've had so many people pressing and so many people are short. You'll often get a sort of a poor low, and it'll reverse up. I think if you're long Tesla now, like if you bought the dip, so to speak, there are a slightly higher low on the daily chart. The 326 was the low. No, 327 was the low. And then the next day was what's going on here? It's showing a day skip. Hold on one sec. Let me just zoom in a little bit better. Here we go. So 327 looks like it was the low. Then the next day made a higher low. Elon Musk had tweeted, right, 3:30, because I think it was weekend. So anyway, it came up. And now we're right up against the 20-day moving average. So for me, what I would like to do with Tesla, if I had my druthers, I think that playing here is just gambling. I would like to see Tesla break the downtrend and buy it on momentum. Often I would like to pay higher prices and know that it's sort of safer ground. Now I see Tesla as having a lot of resistance. The support had been this 206 to like 203.64 to 206.84 area, and I think that's going to be resistance now. On a rally back up there, I think it's going to be resistance. It has been a little bit. It's also the channel top. So it will be resistance until it's not resistance. Yes, I actually do think Elon Musk does tweets to manipulate levels. I think he's very conscious about the stock price, and I think that he has got the efficiency of a hydraulic press in terms of causing a short squeeze. And I think he does. I think he's a very savvy guy. A lot of people don't know this, but he actually invented PayPal, and he had sold it to eBay. That's one of the reasons he has all this money. So I do believe that he does create that. The story for me with Tesla, the reason why I had been bullish on Tesla and why I've cooled on it, and I think the street has cooled on it, is because there aren't really any catalysts ahead of it. They delayed their Model X. Elon Musk sounded like he had been up all night sniffing cocaine on his last conference call, with some crazy statements that he thought that he was going to get Tesla to be the same market cap as Apple. I mean, all right, maybe, but saying things like that doesn't really help his credibility. He's going to spend tons and tons of money, he had said. You don't want to say that. I think that he should just, frankly, keep his mouth shut. Yeah, you bet. I'm sure it's the best money can buy. I think that he should just not mention the stock price and pull like sort of a Steve Jobs and just do it. I think one of the things that had impressed me about Elon Musk early on was that I remember Tesla had its kind of aha breakout, and he wound up like buying the stock at the time. I mean, it seems ridiculous. I mean, with how high the stock went, but it was high at the time, and it was on a big spike. He bought like shares at $90, and that was sort of like a floor. So I think the best thing, if Elon Musk wants to put a floor in his stock, is just come out and have his like FU moment to the market and be like, yeah, okay, I'm buying $100 million worth of stock here. And that to me would put the floor in the stock. When he actually puts his money where his mouth is, I'm a buyer right there with him against those levels. You could sell puts. You could play against that long until the cows come home, in my opinion. So anyway, that's neither here nor there. Hopefully maybe that'll happen soon. I would love to start playing Tesla a little bit more. Oddly, if you watch Tesla, one of the keys I use to trade it is I look for the IV to spike. Usually you think IV spiking is bad for the stock, but in Tesla's instance, it's because people are buying calls. So you want to play Tesla when the IV is high. I actually like to sell puts, and often what will happen with me and how I know I'm right is I'll sell the puts, and then the puts will go against me immediately as the stock is rising. Like, I'll sell the puts, the stock will jump up 10 points, and the puts will be against me, and I know I'm right because I know people are piling in and buying the calls, and what do? I'll sell more. Or I'll buy shares, or I'll buy calls, because then I have the IV going in my way. So that's how I'll play it with Tesla. No, I use toss. I'm involved. I play in toss. Yes, it's a counterintuitive thing, but that's how you want to play with Tesla. Anyhow, balance sheets, fundamentals. Okay, so balance sheets and fundamentals. You can look that up. I mean, there are tons of financial sites you can look that stuff up on. The issue I have mostly most of the time I use balance sheets and the financials are after we've had a really deep market correction, and I look to see who sort of sift among the rubble, who I think is going to be the beneficiary then, or who has big balance sheets. Like I think I'd heard, I think it was Kramer, one of them had said that he didn't think ExxonMobil was going to be one of the big beneficiaries of this. Completely disagree. I think that Exxon has the big balance sheet, and they are going to be the huge winners on the crash of oil because they're going to be able to, they have, up until recently, Exxon was the most valuable company in the world until Apple went ballistic. So I think companies like Exxon are going to have the ability to buy companies that have great assets at dirt cheap prices. Exxon, by the way, I think has got a little bit more weakness ahead of it. If oil comes down or if it remains choppy, my platform froze. Anyhow, the way I'm playing Exxon, believe it or not, is short. It had a breakdown below 86.03. Anything below there to me is a little bit more bearish, and we've been sort of trying to check back there and just been sort of bubbling under that area, but I don't think bubbling under in a good way. I think bubbling under is in getting ready to fizz out. So the way I'm playing Exxon currently, I have a couple of put ratios on, surprise, surprise, 15 DTE. I have the 82 half 80s, and in another account, what do I have? I had filled these differently. I have the 80s and 77 halves. So these are probably going to wind up going out worthless if the stock doesn't get jiggy. I'll probably have to re-up on them. But I'd be a buyer of Exxon a little lower. I'm looking for a move. Where would I be a buyer? I would be a buyer in somewhere between 80.35, which is a 50% fib, but I'd really be looking to buy 74.59, which is the 61.8 fib. So what I would do on the next leg down, I would start looking to sell some puts into that, and probably you'll get a bit of an IV spike. So currently playing short. I think you could do it with shares if you want, up against that that key 86.03 level. The last spike high, the key reference was 85.82. Wow, it couldn't even get up there. Oh, no. 86 we got up there. That was actually yesterday. So I think if you want to play short, you could play against that 86 level. If you want to play like I'm playing, just do the put ratios, or just wait for it to come down and be the buyer. What do I see with regard to oil? I think, like I said, I think it's in the process of trying to bottom. It's had a few things that have been weighing on it. One of the strong dollar is one of them. Oil is priced in dollars. I think that's, believe it or not, why we have a lot of Middle Eastern tension. Any country that tries to sell oil and they aren't on the dollars, I think we kind of get on their case, not to be too conspiracy theory-ish. But that is one of my thinking. I also think that there has been a huge production boom in the United States. These shale and oil plays have really come home to roost in terms of the price of oil, which is great. I actually believe that the lower price of energy is good for the world economy, particularly in Europe. And I think that's part of some of the European strength lately. Europe doesn't have natural resources like the United States does, so that's partially why their economy has problems. I think that, by the way, I think Europe's economic problems are more structural than cyclical. If you guys want me to get into that, I will. I'd rather move on at the moment. It just means that I think they're going to be in trouble for a longer period of time. And the issue with lower energy prices is that it will help their GDPs in terms of people having more money to spend on goods and services rather than spending it to heat their homes or fuel their cars. So I think the lower price of energy is actually great for the economy, for consumers in particular. And now we're coming into the summer driving season, lower gas price. I mean, I know when I go to the pump, I'm a lot happier now than I was, even a few months ago. So let's get some more questions. I hope this didn't freeze. Oh, Solar City. So that's a great question. Let me come back to Solar City in a sec. I promise I won't forget. Actually, let's just do Solar City first. First things first. So Solar City is sort of has been in a downtrend within a downtrend, and today was one of the first days that actually closed slightly over it. See, the issue with solar is the declining price of oil. A lot of people equate them, whether or not it's true or not. I think that Solar City is starting to eat into a lot of the utilities, and they have a interesting business model, but they need solar to really take off, so to speak. I think that these are very speculative types of stocks, and if the market is going to come down, I think that Solar City will probably wind up still being under a bit of pressure. It's also an Elon Musk name, interestingly enough. I do think that it looks like it's trying to build somewhat of a base. It's consolidating, but I hate to say I want to punt on it, but I'm a little iffy on the whole market right now, so I don't know that I'd be rushing into Solar City. I think if you want to play Solar City, the way to do it is to sell out of the money puts. Let's take a look at those, actually. The IV percentile is really low, so actually you don't want to sell out of the money puts. It's only 17%, and the current historical IV percentage is 9%. That can't be right. The 52-week... All right, so it's yeah, they're pretty cheap. You might, if you want to do it by calls, actually, maybe do some call spreads. The about doubling down and re-upping. I don't always do it. I just sometimes, if I still see the setup being valid, sometimes it'll take too long. Like, let's say something's been consolidating too long, I won't re-up because I think that the snap or the move could be really, really super violent. And put ratio is always the fear, is that it's too steep down. Anyway, back to Solar City. I hate to say I'm going to punt on it, but I really would like to see the quarter, frankly. I think that if the quarter is good, it would go up and you could ride the momentum higher. I think if the quarter is bad, there's going to be a lot of supply here and it can go lower. I would play it if I wanted to play defined risk only. I would do it with calls. I've done really well, actually, trading Solar City in the past. On momentum, I just haven't been really trading it as much lately because I haven't seen a catalyst. It's really just been in this wide range, with the low of the range being this 45.60 and the high of the range sort of being this 59.31-ish area. There's been a little bit of a look above to the 61 area. So I would wait for that range to break, either down or up. If it breaks down, short. If it breaks over, play the long. There is downtrend resistance if it were to get there tomorrow at about 65. So, like, for example, on a good earnings report, you might get a gap and go and look to either play row short on the downtrend line or play long if it's on a breakover. I sort of don't like playing in the middle of ranges. I really like playing the breakout or the breakdown once I really see it. So that's really my opinion on Solar City. It's sort of a bit of wait and see. If you want to play it now, do it with a call spread or a put spread if you have a directional bias, or do both if you want. Thoughts on GoPro? Oh man, you're barking up the wrong tree with me with GoPro. Thank you. I'm glad you enjoy my charts. I don't like GoPro. I think GoPro is a piece of garbage. Watch the stock get back up to 100, get up to 100, and I'll look like an idiot now. But I don't think they have anything that's a sustainable proprietary technology. I know a lot of people talk about them being a social play. I way prefer YouTube over them. I see them sort of as a flip camera. I don't see why, how many times, like, for example, how large is the market for an iPhone? It's huge. Everybody wants a smartphone. How large is, the extreme sport market, or how many times can a dentist buy a GoPro to stick on top of his, hat to film his oral surgeries or whatever? They're expensive pieces of equipment, and I can't see them being replaced. I sort of see that they'll have a rush of people buying them, and then how often do you need to upgrade your GoPro camera? Not very often. I'm not a big fan of the stock. I think that you can trade it. It's had 50-day resistance. It's been in a downtrend. If you could break the downtrend, play the break of the downtrend. If not, I would just sort of wait. I see that there is a lot of sort of consolidation support around this area. I just want to go back in time here around, damn it, what was that, 37s, 36s? And we bounced off of that the last time. That to me was the spot to buy GoPro if you wanted to buy it. We've had a bit of a bounce to the 50, and now it's backing off. I'd wait for some momentum. It's got the quarter coming up. If you want to play it, do it with some defined risk strategies with either call spreads or put spreads. The GoPro IV, not available. Oh boy. All right, it's not available. This probably is a better play around the holidays, is my guess. But yeah, I'm not a GoPro fan. If you want to play the stock, wait for a break of the downtrend. That would be currently, if it happened tomorrow, 49, 50-ish area. If it eventually happens later, we could cover. I'll tell you what. I'll cover that if it happens. I will put that in one of my. I'll tweet about it. Sorry. Go ahead. Are there any more questions? I saw a few while I was doing this. I didn't get to see them though. I need an assistant. That's what I'm going to do. I'm going to get an intern to do this with me. Why not IA brokers cheaper as toss? Okay. I have a good relationship with TOS. I had been with their. I had been on a Daytech platform, believe it or not, a really long time ago. I had used Schwab, and then I switched to Daytech, and I've just sort of stuck with it through Ameritrade. And I like their platform. I like the people there. I stick with it. If you call and speak to them, they are usually pretty flexible with them, with commission structures and stuff. It's really not that expensive, and I think that their technology is really good. How do I set stops? That was one of the questions from before. All right. So often it's based on a pivot. I always talk about right or right out types of plays. So like, for example, no, I haven't won the contest. I used to try. I've kind of given up. Like, for example, if you're doing a buy off the 50-day moving average, if it closes below the 50, that's your stop. You're wrong. If you're buying off a Fibonacci level, let's say 55 is your number. If it closes at, sometimes there's a little bit of an overshoot. I factor that into my kind of accounting, so to speak. And if we close below those levels, or if it really doesn't look like it's turning around, I will GTFO, which means get the F out. Often I'll try and, if I'm shorting, I'll try and short a downtrend line. If the downtrend line breaks over and it's sustainably higher, I'm out. It may be a point, it may be 2, it may be 10. It depends on the stock. I try to keep it. I try to keep it small. In general, I try to keep my profit to loss ratio when I take a trade as 3 to 1. I will never take lower than 2 to 1, but 3 to 1. So if for every $3 I'm willing to make, I'm willing to lose $1. That's kind of my rule of thumb when I take a trade long or short. Yeah, I use intraday charts all the time. Multiple accounts. I manage some money for my family, and also I have an IRA and stuff like that. Plus, it's sometimes good to have an account that you use for shorting and one for longs, believe it or not. Yeah, 3D printers, that's going to be tough. I think the problem with 3D printers is that, like, Hewlett-Packard is going to come in, or maybe Apple swoops in and takes it going. I've always said I thought Stratasys is the best of breed, and look what's happened to that thing. It's got absolutely slammed. 3D printing is just, I don't see how these things are going to be profitable in the big picture. Stratasys does it for the 5150 stop. That's what you're looking at. Let's take a look. Let's look at Stratasys. I haven't looked at this in a really long time. I haven't been really interested. I don't know if I've even ever traded a 3D printing stock. Maybe back in the day. It's been so long, right? I'm sure I did at some point. All right, so some of the wow, this is going back a long time. I don't really see why 51.5 is your RORO stop. Let me see. What was the low? 751. Oh, I see. Your reference low of 51, 55. Yeah, I guess if you want. It's also coming down from the bottom. It's been multiple days. Your risk there is gap risk with a gap and go. I would, if you're going to play this, maybe some out of the money puts. I see a big important level coming up a little lower at, not a little lower, a lot lower at, believe it or not, 36. So I'd be a little bit careful. This thing could really, I just don't see how this thing is going to do well. I would be really careful. I'd probably wait till the earnings. The gap risk is always gap down. What I would love to see, if you want to be long Stratasys, is I wouldn't like to be the first guy, the guinea pig. What I'd love to see is like multiple days down and then one big bar up that engulfs them all and sort of is what Peter calls sellers shut off. I would love to see that. Like, for example, on Monday, if the stock opened up bullish, like a gap, and caught everyone who's short, and then like somehow got over 60, that to me would be sellers shut off. Like, you see one of these big body candle bars, and then you could use the halfway point of that bar sort of as your stop. There were a few more. They bunched up, so I sort of missed them. If you guys throw in a little bit more. Express strips, store chasing. Yeah, second mouse gets, yeah, Montana, that's right. Second mouse gets the cheese, often it is. That is true. Which was that one? ESPR? Was that, oh man, this thing went parabolic. I don't like these stocks, man. I don't have any edge in them. In the technology, I think I know. In these some of these pharmas, obviously this had news. They must have had. It's now also, yeah. This is parabolic. It's making a lower high. This is what you'd call the deep end of the pool. I have no edge on this. I would not be. I don't really see. I wouldn't chase it long here. If anything, if anything, you have a reference high for a short. But I don't know what the news is. I wouldn't play it. Jobs report. That's going to be. Yeah, I kind of try to do a little bit of slapping the other day with IBB when Biogen had that gap up. I wish I was a little bit more forceful in my video. Yeah, I mean, there's been a lot. I mean, if you take a look at, what is it, XLV? Let me see. Is it XL? Yeah, if you look at XLV, that thing is up big. I mean, just take a look at this thing on a 10-year chart weekly. I mean, it's been straight up. I think a lot of money has been hiding out in healthcare. I do think it's a buy on dips. The 50-week moving average seems to be some good support. I would use that. It's currently roughly around like 65-ish. It's also, there's the breakout over there was on the weekly was 65.31. The 50-week MA is there, and slightly below around 60 in the 64s is primary trend. So if you got down there, maybe take a row trade on that one. I'll do BABA in 1 sec. I just want to do IBB. So IBB, there's been a lot of discussion about this thing being solid off the 50-day moving average. No, I don't really tend to trade the holiday weekend. It's low volume. If there's an extreme move, yeah, maybe I'll trade ES, but I probably won't be involved in it. I'll wait till next week. The story with IBB, I've discussed this. I'll discuss it again in my weekend video if you take a look at it. The 50-day moving average has been the key. It's also been in an uptrend or up channel within an up channel. It sort of had that bit of a blow off, which I discussed, and it's just been coming back down. It now has a bit of a lower high. If it gets below and closes below 333.78, it gets a little bit iffy. The lows the last couple of days have been just above there, and it's been hovering around that 50-day moving average. So it's sort of now or never for bounce. If it wants to make a W, it can probably get back up to the channel high. If not, there's some really risk for a breakdown, and then I could see this thing coming down to like in the high 280s. At that area, I would be a buyer. There's also some reference lows around like 292. So maybe I think a put ratio actually on this would be good. If it has that break, the IV will probably get jacked up. So that's what I would like to do, a near dated put ratio with those lower strikes. If I do it, I will post it on the Twitter. Take it easy, Martin. All right, so let's cover BABA, and then I'll talk a little bit about the subscription service. I'm not really supposed to talk too much about it yet. I have a lot going on with that, but I'll give you a little bit of a brief discussion. So BABA, I think, is doing a consolidation. 80 is really the key level. If it loses 80, there's really no support that I see because it hasn't traded there until maybe like 66, which was where I think it was trading for people pre-market IPO. I think it tends to hold until it doesn't. So I would be playing it long down here. I know it's looked awful. The options aren't that expensive, so buy some put protection. Just, I would buy, the way I've been playing it is I'm long shares and I'm long put spreads. I actually may, on a rally, close the lower strike put and just own the shares versus the long puts. Honestly, you don't really need to play BABA. I mean, if you don't want to play it, just wait. Wait for the thing to resolve higher. Wait until it makes a higher high. I put this trade on a few days ago. I wouldn't say that I'm stubborn with it. It just hasn't done anything. It's just been chopping around. So the trade to me is no longer, it's no less or more valid. I guess it's a little less more valid because it hasn't made the up move, but it hasn't really invalidated my thesis yet. If it breaks 80, I'm out, though. I will be out. Then the question is it'll look below and fail and it come back up, or is it, a look below and go? So we'll see. Long Bob. All right, so the subscription service, you guys, there was a question about it. It's going to be launching soon. It's been in the works. The technology, believe it or not, to build something like this takes a while to build, and it is in the works. There may be a few different products that I offer. One will probably be more option geared, and the other one will be more momentum stock geared. And then if you bought them both, it'll be a discount. I'm looking maybe $50 to $100 a month for the subscription service. I don't want it to be too expensive. That's sort of the range. So if you think about it, it'll probably be roughly just factor in that it'll be roughly about $100 a month. And for that, you will get access to my trade setups, and it'll basically be spoon-feeding trade ideas. Buy this stock at this price. Here's the price target. Here's the stop, or it'll be an options play. The put ratios, or any of these trades. They'll basically be teed up for you, and then there should be some type of tracking of P&L. We're working out those details. So that's going to be what the service is sort of about. Will your weekly reviews still be free? Cool beans. The weekly reviews, I haven't decided that if they're going to still be free or not. What will for sure be what I think is going to happen is there might be like an abbreviated one that's free, sort of like maybe it just covers SPY or something, or maybe it just covers one or two stocks, and then the more in-depth one won't be. It'll be for premium members, but the following week I'll probably post the premium one so people can see it sort of after the fact. It won't be, in some instances it'll still be useful, but it won't be as actionable. Everyone needs what's current. So that I'm playing around with that idea. I haven't decided yet how I'm going to handle that. But there should be something that'll still be available for free. Chat room, that is a big discussion at the moment. As of now, I'm leaning toward not. All right. So, yeah, it finally worked out. I know we had to restart it a few times. So we're gonna go. Let's do another couple of minutes. We'll wrap up at 6 o'clock, so we have another 8 minutes. Activus. It's not one I really follow. This is also something, just so you know, guys, I follow a really narrow set of stocks. It's sort of like that scene I always talk about in Hitch, in the dance scene where he, tells him, arms, you're straight, and you go like this, sort of. None of the wild dancing. I think that if you follow too many stocks, and I discussed this in my risk management video. If you guys want to watch that, it's on my YouTube channel, which is youtube.com. I think it's /c/Justin Pulitzer Trades. I have it in my Twitter description. But the thing about me is that I think you can beat a horse race, but you can't beat horse racing. Like if you go to the track and you really study the horses and you know the jockeys and you know the conditions. You can probably pick one or two races that are winners, but if you went and you try to bet on every single race, you wouldn't win all of them. So to me, I don't really see the point of playing more than a handful of stocks. So if any given period of time, yes, it's a Livermore. Yes, I'm a big Livermore student of Livermore. That book to me is sort of like The Godfather. The more advanced you get in trading, I try to read that book once or twice a year, and the more times I read it, I always walk away with something new, like a new lesson as my understanding and my progression of trading increases. My ability to use those lessons increase. So I try to read that book often. There's also another book I like to read once I have this book that was pretty cool. The books that I might like, if I was stuck on a desert island, the books that I would want to have. Yes, there probably will be some type of an education section, that's for sure. The books that I think are the most important are Reminiscences of a Stock Operator by Edwin Lefebvre. If you haven't read that, read it. It's very entertaining. It is the story of Jesse Livermore. Unfortunately, it doesn't cover 1929, which was the big crash where he made like $100 million. It's like $2 billion today or something. He was short like 1 million shares or something. The other one that actually, believe it or not, Reminiscences was originally written in sections for the Saturday Evening Post, and it was posted like that, and then they put it into a book. The other one is not as well known or followed. It was actually written shortly before Livermore killed himself. It's called How to Trade in Stocks by Jesse Livermore. It is a really, really great read. It covers his methodology. It also discusses some of his mistakes that he's made, and he often talks about taking money out of the market and taking profits when you have them to sort of live on, and so to speak. If you haven't read that, it's really, really great book. The other one that I read sort of just to scare myself to death is The Great Crash 1929 by John Kenneth Galbraith. Galbraith is a little bit too liberal for my taste. I don't like some of his critiques on why the blame he sort of shifts on people for the crash, but he does a very entertaining and a great documentation of what 1929 and the 1930s looked at. And if you can realize that he is coming from a bit of a liberal point of view, it is definitely worth a read. So, wow, I'm getting a ton of messages here. There was one more that I wanted to discuss. There was something one of you had just said that I wanted to discuss. I just missed it though. Damn. Oh, ACT. I don't really know that much about Activis. I will do a little bit of homework on it and get back to you on that. I don't want to punt. The chart looks as, what is it, Dennis Gartman says on TV, from the lower left to the upper right. I mean, the stock looks bullish. I mean, it's had periods of pullback. It looks like it's having a bit of a pullback now. It looks like the 50-day roughly has been some good support. It also had some support off the 200-day. This, to me, again, it's outside of my field. It's the ExxonMobil of genetics. I'm going to do some work on it. I really don't know that much about it. I'm a little embarrassed to say that, right? If it really is the ExxonMobil of, I should know about it. I'll do a little work on it. I'll get back to you. I want to look a little bit more on the technical picture. I do see some support around the 50. Maybe I don't know how liquid this thing is in terms of the options. Let me look at the bid, the spread. I hope it. It's not so terrible. Yeah, maybe I mean, you could do maybe a put ratio with this, maybe with the 200-day being the lower one. I think it's like a 251 now. I mean, it's a pretty big move, right? $50, but it's possible. How come gold? What about? Sorry, what was that about Goldman Sachs? I saw something about GS. Simple moving average, not exponential. I use the simple. Yeah, maybe in a big market correction, I will do some more work on that one, on that act. Goldman Sachs, I see it having a little bit of resistance. It's been in sort of a it's in a bit of a triangle here. Never short. He said why I would never short Goldman Sachs. I would short Goldman Sachs. I've shorted it plenty of times. I see the resistance currently up around this 193 in the 193s. It's also the downtrend and roughly the last swing high. And then the support is on really the channel low down by the last low in the 182s. So I'd like to see a break in one direction. Excuse me. If it's a breakout, I'd play it long. If it's a breakdown, I'd play it short. I'd probably do right or right out short at the old resistance, and then long at the old at that old support. If the right or right out short was wrong and it took out that high, I would just flip long. A lot of people can't do that. There's a it takes it's funny. It sounds intuitive that if you're wrong, you could flip quick. But a lot of people don't have that discipline to do it. Not everyone can flip that quickly. It's something I guess a little bit more rare. The technical indicators that I use in terms of what? Like, you mean like stochastics or Fibonacci's? You'd have to be a little bit more specific on that. I think shorting in general was her favorite pastime. The girl was, she was a monster. She loved to short stocks. Although she was sort of the, I used to joke around, I'd call her the poster girl for the bulls in the end. There was a question, thoughts on, I don't like levered ETFs. I'm not a fan of them. MACD, yeah, I use the stochastics often. I like I said, my order of operations: pivots, Fibonacci's, then simple moving averages. I always like to buy stocks that are in uptrends and then buy them on the dips. When they're in rallies, I like to short them on the rips. It's sort of the trend is your friend, and just keep it simple, stupid. So we're at 6 o'clock here. I think we're going to wrap up. I will be doing the weekend video, as always. That's on Sunday. You can see it on my YouTube channel, and I will tweet out the link. Anyhow, guys, have a great long weekend. We have Friday off. I suggest using it to do something other than the markets. I'll probably use it to read Reminiscences of a Stock Operator or watch Caddyshack, but we'll see. Anyhow, guys, take it easy. Cheers. Have a great weekend. I will see you on Monday. Friday, we have the jobs number. Let's see the reaction. I'm probably not going to trade it tomorrow, but I will be looking to trade on Monday. So take it easy, guys. Cheers.